Okay. So this one is major sign of strength, SOS. Okay, this one is major sign of strength. Here as well, we have major sign of strength, MSOS. Means two major sign of strength. Okay, with JAC. And this is confirming volume. This one was what? Minor sign of strength, right? This spring pattern, right?
Yeah.
And here as well, as we go higher, we also see this one here. You can see higher low in this one. No what?
No demand.
Yeah, and if you try to join this trend line here, it will come off. But the point is, I will not take this because it's not coming on the reference line. That's the problem. Okay. Yeah. And the price is making what? Higher lows. As I told you, this is what we call this pattern as what? Volatility contraction pattern, VCP. VCP, volatility contraction pattern. You will keep on seeing, you will see the equal highs, but you see the lows are going back higher and higher. So there's a pressure coming from the lows to the upside, and this is stagnant. So what will happen if you have a downward pressure and this keeps on going? So this will ultimately break, right? Like you have this one here, okay, the support, and the pressure keeps on coming up like this from the lows. So what will happen? It will ultimately break, test it, and go up, right? This is VCP pattern. We call it as volatility contraction pattern because the volatility is contracting. Okay, the volatility is contracting. You can see the volume here. The volume is contracting, and then the lows are going higher. So this is volatility contraction pattern. Okay. And as I told you, once we observe JAC, and once you observe JAC, which is JAC here, then this range, which is formed right over here, is known as what? Redistribution.
After JC is reaccumulation.
After JAC, oh sorry, this is reaccumulation. Correct. Reaccumulation, which we will assume that the price will go up at this point. And there is one more thing. This is resistance, right? Near the resistance. If this is a major sign of weakness and buying climax, then this is what? This is AR, right? This is AR line, right? This one. Now try to notice one thing. We have two patterns here, which we can easily say the price will go up at this point. Okay, this is AR, am I right? And what happens as the price is approaching near the resistance? Now you notice on this line, notice on resistance line, this resistance. As the price is approaching here, the price ranging here, we call this as what? Build up. Okay, the build up is near resistance or support. This is support and resistance. So it means the breakout will be on the top. And here we have volatility contraction pattern. So we have two combination. We have volatility contraction pattern plus built up, and this will and this means that we have a higher probability to go. I mean, we have a probability to go up. A higher probability. And now at this point, once we retest on the reference line, the price goes up, we retest on the reference line. What do we notice here? No supply, right? Now you confidently take this trade, place your stop loss right below the low, below the buildup, and then you can just go up. How far will it go? Okay, how far will it go? We will start drawing the channel from this point. Okay, the first higher low was this one and this one. This one, the first higher low. So we'll start drawing this line here, this channel here. Okay. Now, let me remove this on so that everything becomes clear now. Okay, so we have already achieved jump across the key. Now, is this overbought?
No.
Why?
Didn't close
It needs to close below the trading, the trend channel,
within the trading range. Yeah.
right? Yeah. This is not overbought, right? The price keeps on going up and up and up. And what do you notice here? The price keeps on going up. What you can do in this situation, you have to wait. Okay. And now we can just wait. What we can do, we can extend this channel right over here. And the first time the price close here was at this point, right here, the first time. So, and we can see, but the problem with this is, do we have a high volume? Do we have a high volume?
At where?
Like if we say this is a buying climax, okay, and oversold. Yeah, this is overbought and buying climax in terms of, because it's closing down the channel and then it goes up and retest it. But the problem is we do not see any high volume, nothing like this. This is a high volume, right? We do not see such kind of volume here. So we cannot say, and the volume is below the average line. This is average volume. Can you see average volume? This below moving average line, it's below this average line. So this is not a high volume, right? Instead, what do we notice here? The price came back and rejects this channel on an effortless no result bar. Can you see? This volume is very huge.
Yeah.
Right? So it
Yeah,
means the
right.
buying climax has failed. So this is a failed buying climax. Because why this is a failed buying climax? Why? Because the volume of this bar, which is a rejection, is actually higher than the buying climax volume. Right? So we can draw easily, and you can see the price after this turn back again. We can draw a support line here. Okay. And now what happens? We cannot take any trade. So you will not take this trade. Why you will not take any trade? This trade? Because there is no high volume, right? And the volume here is higher than this. Efforts no result volume is higher than the buying climax volume, right? So this does not qualify as a higher volume. And now the price is coming down. You can see.
Yeah.
Now, as the price is coming down, the price makes a continuous spring. But as I told you, the spring must have a higher volume. We cannot see any high volume on the spring here. Okay, this is not a spring here. This is the price just came down and then reverse here, right? So we can see there is no such high volume over here. The first higher volume was observed right over here. So this is the actual spring.
Okay.
Okay, this is the actual spring. Okay, an actual spring. Okay, so, and you can see here. You can see here, this one. Sorry. This is a major sign of weakness, you can say. Because here the price does not close below the channel. The price just came back and rejected this channel and moved up, right? It should close below and then go up, right? So we cannot quantify it as buying climax. Do you understand this point? Number one, it does not close well below the channel. Number two, we do not have any kind of high volume observed during the buying climax. So this is not a buying climax. And instead, what do we see? We see a low here, higher low, and we start, like seeing this kind of just a normal range, right? So this is spring action. What happened? What I told you, the spring must come down and close above on a high volume, okay, which was only observed at this point. This spring, this is not a right spring, right? It is not on a high volume, right? This one, it closed above. Now, now you compare this and you compare this. Can you see? The volume of this testing volume, which is of this testing volume, okay? Testing volume of this one is higher than this one, right? Sorry, the testing volume is lower than this major sign of weakness. So this will be marked as major sign of strength. This will be marked as minor sign of strength. Do you understand?
Yeah.
Okay, and you can see the volume. The volume here is lower than this one at this level, hinge point, right? And then we reverse above. And after this, the price, it's very hard to just take a trade like this, right? because the price is still ranging. We don't know where to place. The problem here is if we take a trade here, we don't know where to place our stop loss because there is no low. No low has been formed. Okay. But now here, what do we see here?
Right here, here technically it's sort of like a build down also, right? So
Sorry,
how would I know this build here?
can you
The
repeat your
minor
question?
sign of strength. So before the minor sign of strength, it looks like it's built down. Correct. It looks
This
like a
one
build down, right? Yeah,
build
yeah.
down
But
here.
how would I know this build down would fail to go down?
The build down will have a horizontal structure like this, as I showed you here. This build up right here, horizontal structure. But if you see this structure, it's actually coming like this. So this is not actually a build down.
Okay.
And this build down is forming after the breaking of this low. So it does not make any sense. This was formed before the breaking of the high, right? Right over here. This breaking of the resistance. The build down, okay. The build down is, okay. If this is a resistance, the build up will form just near resistance. It will not break it. And then we can draw and then the price will break finally up. Got it? But here in this case, what happened? The price breached below the support and then you say this is a build down. This is not a build down. The build down must have formed right over here, and then break out to the top on a sharp reversal. It's just like of this huge volume. Okay.
Okay.
Right. And it's breaking above this one, right? In this case, we are not seeing such kind of structure. Okay. And we see that the price came back here and we can draw this horizontal structure and we can call it as you fail to recognize SOT here. This is shortening of the thrust, right? This whole shortening of the thrust, whole process. Now, the problem with this is I cannot take this trade because I want the oversold here or shortening of the thrust, right? So it's very hard to take such kind of trade. So what I'm going to do, I'm going to wait for the price to go up just like this, jump across the creek. Okay. Jump across the creek here because we are breaking this. So this spring was complete over here and we can take our low here and go to the upside. Because why we can go confident to the upside? Because the bias is what? You can say this is a failed buying climax. The bias is what? The bias is bullish. Do you understand?
Okay.
Now, if this was a higher low, let's suppose, right? This was the first high, the major high. The first higher low was observed from where? Can you tell me? Let's draw this again. I will explain you again. Let's remove this all. Let's forget about the shortening of thrust and MSOS. Okay. If this was a first higher low, the first higher low was observed around this area, right?
Yeah.
So we can draw the channel from here to here like this. Shortening of the thrust, you can see continuously. Am I right? And this whole process is doing what? Can you see? Shortening of the thrust, SOT. First touch, second touch, third touch, and then the price makes a spring, you can see. And this spring comes at what? This spring close above. Okay, this is actual spring and you can see the volume. And the price came back and retested this spring again at a no supply. Do you understand?
Yeah, okay.
You can also take your trade here. Yeah, you can take your trade here. Okay, spring, you can take your trade here. But the problem is if you place your stop loss here, you're going to lose your trade. Right? There's nothing wrong with taking the trade right over here. you can take the trade. But the problem, you know, right? Okay, the spring must have a higher volume. Now this one here, they both are equal volume almost, right? The spring, but this one is noticeably higher volume. Do you understand?
Yeah.
Okay, no supply and test, and then we go up. Okay. Now let's do for the gold one. We go to the 15-minute time frame. The London was open right over here. Sorry, New York. New York was open. The London setups are a little bit complicated. Sorry, the New York setups are a little bit complicated. Okay, because you have to take care about the pre-London or the pre-New York Open and the post-New York Open. But the London sessions are easier to catch. Okay, so I suggest you as a beginner, you should focus on London session more.
Yeah. Okay.
Okay, so at 6 o'clock is the first one. And you can always see whenever the New York opens, there will be high volume. And then at here. Okay, these two parts. Okay, now we go to the what? Now we see the bias again. Here it's same bias here. Okay, the price is New York. Now when was the London open? The London was open right over here. So after it, we have to draw the channel. So there is London high, right? London low is not established, right? There is no London low because it's still ongoing session, because at this time when the New York opens, the London session is still in operation. Do you understand? That's why we cannot figure out the low of London. Got it?
Yep. Got it.
Okay. All right. Perfect. Now what we have to do, we have to identify now after London open, you see the price is going down. What structure can you say? The first higher low was here. Can you draw the structure like this? This is equal, almost equal London structure, right? So if we keep on drawing this one, right, from here to here, okay. Here the price start to break down, but reject and then went back. This is the oversold. The complete oversold was here. Now, in 5-minute time frame, we can refine the structure. Okay. So this is London open. The first high low here to here. Okay. And now the price just rotates around here. Nothing. There is no oversold, and the price once again goes down. So we can draw another channel, as I told you. If we have situation like this, we can draw another channel. Now you can see that the London, that this is actually, what do you notice? Oversold. Okay. And the New York session was open right over here. This is the New York session open. Okay. So can you tell me the bias?
Bullish.
Okay. Oversold plus buying climax. Okay. So the bias is bullish. And once and
Selling
when the
climax.
when the yeah, sorry, selling climax. Sorry. Selling climax. Okay. And once the New York was open, okay, this move can be known as AR. Am I right?
Yeah.
Now we can also draw this line structure here. Easily draw the structure, horizontal structure, like this and this. Now, what happens after a secondary test? Okay, the secondary test is also on lower volume than this, right? You can see this volume is much more higher than this one. Okay, but the point is here that there is no sign of weakness here. This is major sign of strength. And how about this one? Testing.
Minor.
And after this, there is nothing, right? Because the spread of the bar is increasing and the volume is increasing. No change. No efforts, there is no efforts, no result. There is no demand, or sorry, no supply, nothing like that, right? But you see the next one here, this one. The price breaks below the low and close above. I give the name of this bar, specific bar. I call it as key reversal,
Okay.
right? This key reversal, the short form is KR, key reversal. Okay. The key reversal is your setting, right? But the problem is the key reversal volume is higher than oversold. So what we need a testing of this bar. So we again draw another support here. Now we test it. Here we have what? Up thrust, right? Spring, KR, secondary test, and this is spring, am I right? And see the volume and how this is closing. This is spring, right? And spring volume is lower than this. Do you understand?
Yeah.
Now, these both are minus major sign of weakness, and this major sign of weakness, because this is a high volume, this major sign of weakness is transferred to this as well, major sign of weakness. Okay, why it is transferred? Because this has higher volume than this one. So the sign of weakness, the major sign of weakness from here is transferred to here. Got it? It will retain its weakness, not weakness, it should be strength. Major sign of strength. And now we have a spring here. The volume of the spring is lower than this one, KR, the major sign of strength. So this spring will be minor sign of strength. Okay. And now we can take the position, the upside. Do you understand? This happens right after London Open. Sorry, after New York Open. And you take a trade. Okay. And now what happens? Now at this, now this line, this one, this is 5 p.m. my time, which is 8 p.m. your time, is pre NY Open. NY means New York. Okay. And this one is post NY Open. Now, can you tell me what happens during post NY Open? This one, AR, we are breaking above this bar, right? Right at this bar, at post NY Open. So we can call it as jump across a creek. Am I right?
Yeah.
And you know, jump across a creek is what? Major sign of strength. Okay. And here, this minor sign of strength, this spring confirms this major sign of strength, right? Here,
Yeah.
this one here. So, and once you observe the major sign of, what to say, the weakness, sorry, the major sign of strength, which is JAC. After JAC, I told you whenever we form a trading range, which is this one, this trading range is what? Reaccumulation. Got it? So do not take a short trade. At this, after JAC, never take a short trade. Never go, never sell, never place sell order. Always look for buy opportunities. Okay. Now, this is major sign of strength. And here, after this, what do we see here? The price came down here. What do we see here? No demand, no supply, no supply. And this no supply is LPS, last point of support after JAC. Do you agree?
Yeah. Okay.
Okay, we can take our trade here. Okay, stop loss obviously below, like something below here, and take our full entry to the top side. Okay, easy. And how about this one? A second entry here. We have multiple entry. If you miss this, and then we have this one here as well. But this does not come at the reference point here. Okay. This one does not come as a reference point. The price goes up here. And this one is also key reversal. But the problem with this key reversal is it's too high. The entry will be too high. And we will not get a positive reward to risk ratio. So we will not take this trade. Understand? So we will again wait for the testing. And this high volume, it should be retested. And whenever we observe the high volume, it should be retested. Again, a very high volume, right? And if you take this trade, you see the distance is very low from here to here, the next support, right? But how about this one? Small bar. Effort versus no result. Do you agree? These both bars. Okay. So we're going to take this trade, effort versus no result bar, testing it. The low is here, and now we can go short here. And now after we break this, okay, we have a jump across the creek, and we have this New York. This was what? London high. Okay, this was London high, right? This London high. And once we break through this London high, we called it what? And you see the volume. See the volume here. Very high volume. We break above it, right? We call it as again jump across the creek. JAC, right? Of the London high. And I told you again, whenever we have a JAC, then it is reaccumulation pattern. Understand? And what do we have here? You can see higher lows, higher lows, higher lows, volatility contraction pattern. On the third touch, this is first low, second low, third low. And third low is what? No supply. Right?
Yeah.
You can take a trade here, easy. Go to the upside. Okay. And now, after observing this, if this was the first low, our first low was after this low. These are the equal lows. After equal lows, our first higher low was here. Am I right? So we can draw the channel from here to here. Don't forget to draw this. Okay, because this will tell you where to exit our trades. And now we observe this one. So we gonna just draw the trade here. What do we notice here? This first touch, second touch, first touch here, second touch here, third touch here. This is what? Shortening of the thrust, SOT. Okay. But the problem with this, what is the problem with this SOT? Can we call it as buying climax? This SOT? Can we call this as buying climax?
No, not really.
Why? Because we do not have a huge swell in volume. The volume is below average, right? And there is no sudden acceleration. This is acceleration, no sudden acceleration. It's same, almost same, no sudden acceleration. Got it? So it does not quantify, right? So this would break through it. And you know, this was a London high. If this was jump across the creek, this whole move was a jump across the creek, then this one would be what? This whole move would be what? LPS, last point of support, right?
Yeah.
Because this is creek. This is creek, this is creek, this is creek. These two are creek. If these two are creek and this is jump across the creek, and there is no oversold, there is no overbought or no shortening of there is shortening of the thrust, but there is no high volume. Okay, so there is no buying climax observed. So obviously, this would not qualify as a distribution pattern. You will miss this trade. You will wait for the price to test this region again. And what happens, you see.
Effort versus no result.
Effort versus no result. It's like initial momentum thrust. It's like this is initial momentum thrust, not effort versus no result, because it's coming on the down move. Effort versus result will be on the up move. Do you understand?
Okay.
And we have an initial thrust here. And if we go to the 3-minute time frame, we can further see. Now you see here. This is key reversal. You see, the price came back, reversed here, 2-bar reversal. Can you see? And now what happens? The price comes back and tests this high volume. This, if we observe a very high volume here, this volume should be retested. So we draw a line here and see where it's retested. This got retested over here, this one, okay? And here, what do we see here? Here, yes, this is a key reversal, but it's not on high volume, okay? And here, what do we see? Effort versus no result. Can you see?
Yeah.
Now, and we can check our trade, and our low was this one. We can place our stop loss just below it, okay? And our, obviously, our take profit can be all the way to upside this side, but I will not go this long. I will only go for 2 hour, but you can, but there are some people who would go for this one. And if you go for this one, this would be 10-hour trade in just like how many minutes? In just 1 hour, one can make 10-hour in this trade, but I will not go this long. I will just exit on 2 hour. Understand?
Yeah, understand.
Yeah. And one more thing you can do, we see we have equal lows here. The first higher low was here, right? Okay. This one here, equal lows. We cannot, the first higher low was observed right over here and here, this 2 point. And we can draw slide channel like this. And we can also say this as a shortening of the thrust. First touch, second touch, shortening of the thrust. And you can see the volume here, shortening of the thrust, a very huge volume, selling climax. Make sense?
Yeah.
If you draw this channel. So you can combine, you have to combine all the concepts together to make a sizable trade, right? The thing is, you should have a concept. You don't have to just learn the structure and do it. Like, you should identify the structure, and the first thing is, whenever there's a high volume, it should immediately catch your attention. For example, we have a high volume here. This should catch your attention. Now, this high volume is what? Is it a buying climax, or is it a jump across the creek? Because if it's a buying climax, then it means the price will reverse. It will be distribution. And if it's a jump across the creek, then it will be reaccumulation. Got it? Now, if we extend this channel here, and this move is what of this channel? Jump across the creek, JAC. Right? This whole move is jump across the creek of this part, right? This huge volume. So this means that if we see any range after this, we will see what? Reaccumulation. Got it? Because it is coming after jump across the creek. And what do we see? You can see volatility contraction pattern. The first high, see high, low, then low, low, higher lows. Every time we are getting higher lows. And the price here, at the third low, the price made what? Effort versus no result. This is an entry point. Okay, you can either place on this one, or you can place on this one, this breakout, whatever. And we can play a stop loss here. Okay. Got it?
Yeah, got it.
Okay, okay. Now that's it. So we finish the session, or you want more practice now?
We can stop here also.
Okay, so we can continue in the next session, but now this one here, you see what happens? We cannot, if we draw the channel here, there is nothing so special about the channel. The first higher low was observed right over here. And if you draw the channel here, right, can you see? The price just makes a low. It makes sense there, right? And you can see the volume. See the volume here, a very huge volume, the top side, right?
All right.
Right. But the problem here is what is the problem here? Do we see any kind of overbought, oversold, something like that? No. We do not see any kind of overbought because of the volume. You see the volume. Now this huge volume comes after, see this one. You see this volume? This is overbought. You see the volume here?
Yeah.
Now this one comes after here, when the price is already moving upside. So this one is actually, you can see, right? And the price comes below here. So it means we do not have any background here. We do not have any major sign of strength, major sign of weakness here. So this means that it will fail. Do you understand? And then now we have a high volume here, 2-bar reversal, this one here, 2-bar reversal here. And now we have very high volume, and this needs to be retested. And what happens after retest? The price resumes upward direction. And you see here, what happens? the price comes down, effort versus no result. Can you see? Very huge volume, the price reversed, go back above. And if we have a high volume, what I told you, the price needs to be retested. What does this tell you? Is there a buying or a selling?
Selling.
There is a buying. Why? Because you will say this is effort versus no, this is falling through ice. This is not falling through ice. Why? Okay, first of all, we do not have any kind of shortening of the thrust. We have this one. We do not notice any kind of, because there is no third touch. The first touch, second touch, where's the third touch? The third touch should be here, right? We do not notice any kind of third touch, right? You see, first touch, second touch, there is no third touch. It should be over here, right? Third touch, but there is no third touch. Secondly, we do not see any kind of high volume on the overbought. But you see the volume here. Once the price breaks through it, you see the spring, this volume, the price goes down. Now you draw this channel. What happens? The price comes down, breaks through it, rejects and close above. What does it tell you? The buyer is coming at the bottom, right? So you start drawing this. So this is a kind of spring pattern of this one. Do you understand? And now we tested it on a very high volume here. What do we see? Confirming. This was a major sign of strength. And this was confirming no demand, no supply. Can you see? No supply here. This one, no supply. No supply. And then after this, again, we have and this needs to confirm. And you see here, effort was no result. So you can go long here, exit here. And then we see here another one. This is what? Spring. So if this is spring, then this will be test of spring. And the test of spring is on a very huge volume. Effort was no result. The price went up. And then it tested here again. What do we notice here? A very, very small volume, right? So this is actually a no supply here. We can go long 2 bar reverse. Stop loss here. So it will go all the way to the top. 2R. So we'll assume that the price will continue to go in an upward direction. Do you understand that how you have to combine volume and price?
Yeah.
And structure? Okay. All right. So let's finish this webinar. And if you have any confusion, just let me know by WhatsApp. Then we will do some more webinar sessions.
All right. Thank
And
you.
if you have any confusion, then you can let me know. I will record small videos like explaining to you the concepts of reaccumulation, or if you want to know about major sign of strength, major sign of weakness, and all those stuff, then I can create small videos for you, and then you can go through it. Okay.
Okay.
Okay. All right. Bye-bye.
Bye-bye. Thank you.